Okay, in this example problem, it's about operating loss carryback and carryforwards. So this problem states, the following information is taken from the financial statements of Arrow Inc. And you've got all this information here. We're going to come back to this. And then in the instructions it says, the company elects to use the carryback provisions of the tax law. Number one, we're going to giving the information from the financial statements, compute the amount of income tax refund due as a result of the operating loss in 2011. What is the amount, if any, of the operating loss carry forward, and how would the operating loss carry forward be reflected in the financial statements? And number three, we're going to assume the foregoing information except as follows, that we're going to add in that the loss in 2011 was $39,000. And calculate the refund due and prepare the journal entry to record the claim for income tax refund. And B, in addition to that change, in A, we're going to assume that there was a loss of $28,000 in 2012, and we're going to compute how much could be carried back and how much could be carried forward. So number one, given the information from the financial statements, compute the amount of income tax refund due as a result of the operating loss in 2011. So here is that information. Okay. So the taxed refund, first of all, so in 2011 we had a loss of $94,300. Okay. So you can carry the loss back 2 years. So the loss will apply to the information from 2010 and 2009. So if we go back down to this table, in 2009 the amount of loss applied to the income, the negative income, is 33,100. The income tax rate in that year was 40%. So the amount of the refund due from prior year's income taxes, 33,100 times 40% is 13,240. And as you'll see, this is the exact same information that's in the table from 2009. So then we go back 2010. The amount of the loss applied to the income is 22,500, and these are the full amounts from these 2 years because the loss of 94,300 more than covers these amounts. So again, this information is exactly the same as the information from 2010 up here. Taxable financial income 22,500 at a tax rate of 34% gave us the income tax paid of 7,650. So when you add those two together, you have a tax refund of 20,890. And this note just says that the operating loss of 94,300 can only be carried back to 2009 and 2010. You can only carry back 2 years. Okay. Now number two, the question is, what is the amount, if any, of the operating loss carry forward? How would the operating loss carry forward be reflected in the financial statements? So if you look at this carry forward here, you have 94,300 minus the 33,100 minus the 22,500. You still have 38,700 left over to carry forward. And that's just these same two amounts that we computed. Well, we didn't even compute them, they were just from the table for number one. So you minus those two amounts from 94,300, and that leaves you with 38,700. So if we look at the note to this, it says, and this is the explanation for how to account for it on the financial statements. The expected tax benefit from the 38,700 net operating loss carry forward would be reported as an asset, and it would be valued using the enacted tax rate expected to prevail when the net operating loss carry forward is used. So, for example, if the enacted tax rate for all future periods is 30%, the following journal entry would be recorded. You would debit deferred tax asset from net operating loss carryforward for $11,610, and you would credit income tax benefit from the NOL carryforward, and that is the $38,700 times the 30% tax rate. So this deferred tax asset would be reduced by a valuation allowance if it were deemed more likely than not that taxable income in the carryforward period wouldn't be sufficient to fully realize the tax benefit. The deferred tax asset would be classified current or non-current according to the expected time of its realization. So if it was expected to be realized in the next year, it would be classified as current. If not, it would be classified as non-current. Okay. Now, number 3, assume the foregoing information except as follows. The loss in 2011 was $39,000 instead of $94,300. Calculate the refund due and prepare the journal entry to record the claim for income tax refund. In addition to A, there was a loss of $28,000 in 2012. How much could be carried back and how much could be carried forward? So first of all, in A, the loss was $39,000, and we're going to calculate the refund due and prepare the journal entry. Okay, so here's A, and here's the information and the journal entry. In 2009, okay, so this loss of $39,000, you can go back 2 years. So in 2009, we had the same $33,100, the income tax rate of 40%. The amount of the refund due from prior year's income taxes is $13,240, and this is where it's different. In 2010, instead of the $22,500 right here, you have $5,900, and that's because only $5,900 is left to apply to income, because $39,000 minus the $33,100 from 2009 only leaves you $5,900 to apply to that loss. So the $5,900 times 34% is 2006. So you add these two together and you have $15,246, and that is the refund due. So that journal entry is a debit to income tax refund receivable and a credit to an account that you would call income tax benefit from the net operating loss carryback. And it's just the income tax benefit. Really it's income tax expense, but since you're crediting it, you can call it income tax benefit. And then this part is just labeling what it's for, from the net operating loss carryback. Now in B, we're going to say that in addition to A, there was a loss of $28,000 in 2012. How much could be carried back and how much could be carried forward? So in B, this is our information. 2010, taxable and pre-tax financial income. This is to account for the carryback. You have $22,500. The amount used by the 2011 net loss of $5,900. So you've already used this much. So that leaves you with $16,600. And in 2011, you used all of the $39,000. The loss, and so it can't apply to that because you use the $5,900 as part of this loss, so you have 0 and 0. So the 2012 operating loss carryback is $16,600. The balance is what you can carry forward, which is $11,400, and so your total operating loss is a $28,000, like what question B stated, and that's your amounts. You can carry back $16,600. You can carry forward $11,400.